You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody. Welcome to the Infinite Banking Mastery Podcast. I'm so glad you're here. Thank you for being here. I hope you've been doing well and had a great week. We certainly did have a great week. Just a few days ago was my husband's 50th birthday. And I've got to say that was a lot of fun. The only thing that I regret is that I didn't realize just how many funny things there are to purchase to celebrate someone's 50th birthday. I've just been so busy. So I started looking online for what I could do for decorations for just a little group dinner that we had and didn't really realize. And so turns out there's a ton of stuff and I was just way too late looking for any of that. So I was unable to purchase very many funny jokes. So I had to improvise a little bit and make my own. I did make a few because I just couldn't help myself. But just so you know, if there's a milestone birthday coming up for someone in your family that you care about or friend, you should definitely start looking early for all the fun stuff that you can get your hands on to celebrate. Anyhow, I just thought I would share that bit of information because it certainly was fun and there was a lot more fun we could have had if I would have seen all the good stuff. So today, should I have insurance on my parents? Should I own a policy on my parents? Well, and the answer is yes, of course. Of course, you should have a policy on your parents. However, I will say, unfortunately, that it has become a little more difficult to do so because life insurance companies have been just changing a little bit their underwriting process, or I don't know if I want to say cracking down, but looking more to making sure that there is an uninsurable interest for when you are buying insurance and owning it on someone else's life. So the insurance company wants to see that there's some sort of insurable interest. And what that means is, why do I need insurance on that person? What's the reason that I would need that? Am I taking care of that person? Are they contributing to my household in some way? Are they my direct family, like my daughter, son? So they really want to see that there's a connection. I will say that just a few years ago, it actually was pretty easy to acquire an insurance policy on a parent. The last few times I asked about it, they did want more information, more of an explanation. They wanted to have more of a storyline, like explanation about why that person wanted a policy on their parent. But it is possible, and even still, if the company won't allow it to start off from day one, it is possible to change ownership once the policy is in force. So the parent could go through underwriting. And then if you needed to change ownership after that, you could change the ownership and then just take it over from there. One thing too you could also do is that if it was not allowed, maybe the parent is willing to go through underwriting and do all that, and you're just paying for it and you're listed as a beneficiary. If you have trust with your family member, your parent, that you can be listed as a beneficiary and that won't be changed and you're the one paying the premium, then that's another way to kind of get around it. But what are some good reasons for wanting to have insurance on your parent? Well, I mean, a lot of people will say, oh my gosh, that's morbid. You just want to profit off of your parent, or, that's not a good thing. Why would you want to do that? Have coverage on your parent? Well, yeah, they are likely to go before you. And sure, it could be a way to sort of ensure a legacy from them. And maybe they're excited about that. Maybe they like that idea. Maybe they want to be able to do that. But also, the coverage could certainly come in handy if your parent ended up needing help. They ended up needing some assisted living or a nurse to come by the house to help take care of them. Maybe they're thinking they'll just live with you and you can take care of them. And that may be all well and dandy, except that you may still need some help taking care of your parent. Oftentimes, the kids are still working while the parent needs help. And so even though their heart may be there and they really want to be there just to take care of their mom and dad, maybe it's not possible. Maybe they have to go to work and mom and dad needs more help than that. So it just helps to have that extra cash, because remember that you can access up to 50% of the death benefit for a long-term care need. So if mom or dad can't perform 2 out of 6 of the activities of daily living, they would be able to access 50% of the death benefit. And again, those 6 are bathing, dressing, toileting, transferring, continence, or feeding. So if mom or dad are unable to do 2 out of those 6, and they have a life insurance policy that has a rider on that would allow up to 50% access to the death benefit to pay for those things, you would be able to access and help pay. And you might have been paying the premium this whole time, but now it's going to be easier for you because you're not having to figure out how to help pay for this. If mom and dad assets are getting low or ran out or something, you can help pay and you can access the death benefit for that instead of having to find it in your own budget. That rider can also be triggered by having a cognitive impairment. So it can be just that by itself or 2 out of the 6 activities of daily living. Or maybe you have this policy on your parent and they don't have 2 activities of daily living that they've triggered to be able to access this portion of the death benefit, but they end up living with you and then you end up helping them however you can the rest of their days, trying to make them comfortable and enjoy life. And so this is another way for you kind of to be reimbursed, I guess, so to say. Again, not to make it sound ugly, but it certainly is a thing that I think most parents would be happy to have happen when their child is doing their best to take care of them in their last days. Another thing that you could think about is, or maybe your grandparents have suggested or heard of or thought of, or maybe they want to bless your children with a gift of some sort, or they want to bless them with funds for college or something, some sort of savings. Grandparents can open policies for your children and they can own policies on their grandchildren. And then those grandparents can have access to those policies, can manage those policies, can use them while they're alive if they want to, or they can simply be saving into it for the benefit of their grandchild and then turn it over to them when they're at the right age, or it will automatically go to them as the owner if they are an adult. They can also list a secondary owner if something ends up happening to grandma or grandpa before the kids are adults. They can list a secondary owner so that the parents could be taking care of that policy or someone else that they trust implicitly. And then it would go to the children upon the parents passing or when they feel it's a good time to pass it over to the children. And this is easy to happen when the kids are underage. One thing to note is that the underwriters do want to see that the parents have life insurance. So usually the children are insurable for up to 50% of what the parents have in coverage. So the parents then would need to have coverage in place or maybe could acquire that coverage before grandma and grandpa can buy that policy. If the parents are not wanting to do whole life or save into something like this, they always could do a term policy. It'll be inexpensive and they should have coverage really because they're parents and they have small children. They should have coverage to protect their family anyway. So if their grandparents want to do that, the parents would want to get the coverage in place and then the grandparents could pay for that whole life policies for the grandchildren to have as quite a blessing and surprise to them as they get older. Then those policies can be used for those grandchildren for anything that they need or want, maybe their first car or maybe college or maybe the down payment on their first home. And if the child then keeps it up and keeps paying for it all the rest of their lives, then they'll be able to use it, replenish it, just like we teach all the time with the infinite banking concept, and then use it again in retirement. These policies grow quite well when you start them super young, so it's a great idea. However, if the grandkids happen to be adults, they're over 18, then sometimes it may not be possible for grandma and grandpa to own a policy on them because they're already adults. And so in that case, they may be able to still be the payer. So maybe the children own the policy, or maybe again, the parents own the policy on the children and grandma or grandpa is the payer so that the policy can still be built and they can still use it and grow it for their future. One other thing to keep in mind when you're writing policies or purchasing policies on children, whether it's the grandparents doing it or you for your own children, is that the underwriters want to see equality. They want to see that the children are all covered at the same death benefit amount, which is very unlikely when you're using whole life and IBC unless they are twins. Or they want to see that the premium going in is equivalent for the children so that it makes sense that they can see you're not favoring one child over another. So that's one thing you'll have to consider, that the premiums would have to be the same. And then the second thing would be for the parents that would have to have coverage. But really, we started off this conversation with, should you have whole life on your parents, on your own parents? And I say yes. I think you should have whole life on whoever you can in your family that you love and care about, might possibly be taken care of at some point, and that they should have it too. It might be a little tricky to try to get that coverage, or we might have to do something different where you can't be the owner from the get-go on that parent, but there are some ways to still become the owner on that policy. So that's all I have for you today. I hope that your summer here continues to go well. It's been super beautiful here in Seattle, Washington, nice and warm. And I just hope that you've been enjoying your summer. So I look forward to speaking with you next week. If you're looking into this and you've been studying and learning, I know I talked to a lot of people who've been listening to a lot of things and reading and watching a lot of YouTube videos. So if you're feeling ready and it's your time, you want to start looking into infinite banking and how you can get something like this started up for yourself. And if you'd like to work with me as your advisor, please reach out to me at Valerie@alphaomegawealth.com. I would love to connect with you. I would love to help you and work with you. And I look forward to you reaching out. Until then, have a great week, and I will talk to you again next week. Take care.
This is thepodcastfactory.com.